Evening everyone, and welcome to Election Upset 2024. On Thursday the 4th of July, millions of Brits will be heading to the polls. But the new Prime Minister won't be Keir Starmer or Rishi Sunak, it'll be someone much worse. The next de facto Prime Minister is preparing policies that could devastate your savings unless you take a few simple financial steps today. And what's more, they could come into effect just weeks after our next Prime Minister is confirmed. That's the prediction of today's guest, Nick Hubble, editor of the Fleet Street Letter, perhaps the oldest financial newsletter in Britain. Now, Nick, in your years as editor, you've gone on the record with some bold predictions to say the least. Predictions that later proved to be right. For example, in 2022, you told readers that clean energy stocks would falter despite seemingly endless government assistance, while nuclear stocks would surge instead. You recommended two nuclear stocks that are up 45%, and 530% as the sector took off. And as far back as 2020 and 2021, you told your readers that a historic surge in inflation was just around the corner, despite what central bankers were saying. At the time, it seemed like an unusual claim. After all, inflation had averaged less than 2% per year for the 12 years prior. And of course, I don't need to tell our viewers today what happened next. We all felt the lash of inflation at 40-year highs. In July 2020, you revealed how our central bankers had crossed a Rubicon in your words, but you weren't just warning of inflation. Your second big warning was of an imminent crash in the real returns of stocks, and we all saw what came next. 2022 was the worst year for stocks since the 2008 financial crisis. Thirdly, you warned that the bond market was in for a world of pain. You wrote, the stakes couldn't be higher for investors, especially with the alternative, bonds, faring even worse. Your warning on the bond market was another good call. Not long after it, we started seeing headlines like this. So Nick, I have to say that on the three most financially pressing questions of the 2020s so far, that of 40-year high inflation, a bond market meltdown the likes of which we hadn't seen in centuries, and a punishing bear market in stocks, you were spot on. 3 dire warnings, 3 calamities soon after, and anyone who listened was able to sidestep a lot of pain.
Well, Kit, thanks for the kind words. I've been the editor of the Fleet Street Letter for many years now, and the truth is I've had big shoes to fill from the moment I stepped into that role. The Fleet Street Letter has a long and storied history of breaking uncomfortable but vital truths to its readers, truths that the mainstream media can't or won't convey. Back in 1938, for instance, we were warning readers about the folly of appeasement with Nazi Germany by pointing out that war was inevitable sooner or later. In fact, I think we've organised for viewers to see the actual pages from that specific warning 86 years ago on their screen right now. It might be a bit hard to see because the document was 80 years old when I photocopied it, but the founder, Patrick Maitland, said, Herr Hitler would like to postpone a conflict for another 6 months or until September. You know what happened next. On the 1st of September, German tanks rolled into Poland, starting World War II. This warning is a matter of public record, available for you to see in the British Library at St Pancras. In fact, I actually photocopied that very issue myself. Another accurate prediction my predecessors made was that of Black Monday in 1987, one of the worst stock market crashes in history. But to our readers, that crash came as no surprise. They'd been put on guard over 5 months earlier in a discreet and timely warning. And long before anyone had heard of cryptocurrencies, my predecessors were predicting that a new digital form of money would emerge from all this central banking madness. So I take my role as the editor of the Fleet Street Letter very seriously. My most solemn responsibility is to tell my readers what I would want to know if our positions were reversed.
And that's exactly what you've done since I've known you, Nick. From prescient warnings of imminent inflation to sounding the alarm on the implosion of the green bubble months before it happened, you've never shied away from controversial but usually accurate predictions. Which brings us to the present moment. With Labour leading the polls by upwards of 20 points, almost everyone anticipates a Starmer victory. But you're here today to say, not so fast.
Before we get into that, Kit, I just want to make it abundantly clear that what I'm going to be saying in this video isn't some wild conspiracy theory, and the policies our new leader has planned are all laid out in this report from the IMF in 2015. I'll be revealing what those policies are and who our new leader will be in just a moment. But I just wanted to make it completely clear that it's not a wild conspiracy theory.
Okay, Nick, I've got you. But let's get straight into it then. Who will be the next Prime Minister if not Sunak, Starmer or Farage?
I'm calling him the Shadow Prime Minister. Now, Liz Truss might be a long-forgotten memory for most of us, but she's been out promoting her new book, a book which accuses the Bank of England Governor Andrew Bailey of firing her. And that's why I'm calling him the Shadow Prime Minister.
God, I mean, we had a laugh at the time the book came out and we saw that claim, but you went off and you've done some digging, and so now you're saying that she's more right than maybe even she realizes?
That's right, and it's hiding in plain sight. In fact, I can't believe we didn't see it at the time. What Truss is referring to is a big blow-up in the bond market that happened in September of 2022, when she and her Chancellor Kwasi Kwarteng released their budget. Everyone credits the bond market with causing all the chaos at the time, but that's not the full story.
So, as I understand it, you're saying that the media is only half right?
Yeah, Kit, so the media is correct in the sense that the bond market controls the government. However, who controls the bond market? The answer is, of course, the Bank of England. There are two ways in which this is true. The first is interest rates, and it's very familiar to all of us. Over the last few years, we've seen our mortgage rates go bonkers, and we've had to cut back our expenditure on holidays, on restaurants, on all the sorts of things we like to spend money on. It's very much the same for the government. The government has to pay its bills as well. And so when the interest rates go up on the national debt, that means it can spend less on other things. And so that's how the Bank of England can control the government and its spending and what political promises can be made. Just as the Bank of England has dished out pain to us in our personal lives, it's also dished out the same pain to the government, and it can decide how much of that pain it wants to dish out. The second way in which the Bank of England can control the government is by deciding whether or not to allow it to refinance its debt. So when the government borrows money, it doesn't just borrow, one big mortgage. What it does is it borrows many small mortgages known as bonds. And the Bank of England actually buys and sells some of those bonds as part of its managing of inflation. That also means that when the government is trying to borrow money, the Bank of England can decide whether it wants to support that borrowing by buying the bonds, or it can undermine that borrowing by selling its own bonds at the same time, making life even more difficult for the government. An easy way to think about all this is in terms of a drug dealer and their customer. At first, a drug dealer and the customer don't really have control over each other. But if the customer gets addicted to the drug, then the dealer has complete control over that customer, right? They can decide whether or not to sell that drug. And of course, that heavily influences the customer's behavior because they're addicted to that drug. That's the situation between the government and the Bank of England right now.
Okay, Nick, so I think I see what you're saying, but can you take us through what actually happened?
Sure. So the day before the mini-budget, the Bank of England held its monetary policy meeting. It decided to begin selling £80 billion worth of bonds. It also decided to raise interest rates by 0.5% to 2.25%, the highest level since November 2008, despite declining GDP. That change meant the Bank of England would go from buying government bonds in support of government spending during the pandemic to selling government bonds to reduce inflation. Not only would the government be left trying to fund itself, the Bank of England would actively be undermining those efforts by selling their own bonds too. This made the UK bond market incredibly fragile by heaping a dangerous load onto the camel's back. Crucially, the Bank of England did this the day before they knew the mini-budget would be released. And so when the budget was released, it was like the straw that broke the camel's back. The bond market crashed. Now, we don't know whether the Bank of England sold bonds, actively sabotaging the bond market, but we do know that the bank announced it would sell bonds, and then it didn't intervene to prevent the crash for 5 full days. That's negligence at best, because it's the Bank of England's responsibility to prevent a crash in the bond market. So whether by action or inaction, the Bank of England is responsible for the market crash that brought down the Liz Truss government.
Okay, so while it's the bond market which controls the politicians, what you're saying is actually it's the central bank, the Bank of England, which is controlling the bond market. But if that's true now, why wasn't it true 5 or 10 years ago?
It's quite simple, Kit. What happened was the pandemic. Obviously, the government had to spend frightening amounts of money during the pandemic to pay for things like furlough and lockdowns and all of those subsidies that went out, all that government spending. That tipped the balance, because what it did is it made the government reliant on the Bank of England to finance its deficit. The Bank of England was buying government bonds to support the government during that period. And at the time, it seemed like a perfectly good thing to do. I mean, who cares about the consequences of printing money to finance the government during a pandemic? It's only afterwards that we struggled with the consequences, which were, of course, inflation. Now, that shift is what turned the government into that drug addict in the analogy earlier. It made the government so reliant on the Bank of England that the Bank of England can now decide to either finance the government or not finance it. And not financing it is enough of an act of sabotage that it has the consequences we saw for Liz Truss and her Chancellor Kwasi Kwarteng. Just by refusing to support the government as it usually had during the pandemic, that is an act of sabotage.
So it all makes sense in this instance that once a country has so much debt, the person it's in debt to can control it. But you claim that we've seen this all before, Nick. Is that right?
Yeah, that's right. It's happened many times before, especially in European history. But it's actually happening right now as we record this in France, which is quite extraordinary. It's the exact reason that European markets have crashed over the last few weeks. What's going on in France is that the European Central Bank is warning voters, do not vote for far-right or far-left government parties, because if they spend too much or tax too little, what's going to happen is a crash in the bond market. The European Central Bank is saying we will allow the bond market to crash, the same thing that happened to Liz Truss and Kwasi Kwarteng. This is obviously causing a lot of chaos in people's portfolios right now. European stocks are crashing, and it's also causing a lot of chaos in the French government as well. But to people who understand what's really going on here and how all of this works, they're able to protect themselves from this. Interestingly enough, I just saw a headline today. It's also happening in the UK election, the same story. The reason that the parties are so similar this election cycle is because they're so terrified of what happened to Liz Truss. They don't want the same fate. So they're promising spending and tax policies that are incredibly boring and incredibly similar so that they don't upset the Bank of England, which, as I say, is the true Prime Minister, the person that's truly in control. It also happened in Greece in 2015. You might remember that story about the European sovereign debt crisis. It happened in Italy in 2018. I've prepared a special report which lists many other examples where this similar story of the central bank controlling the government via the bond market plays out. And I believe we're able to send that to the viewers right now into their email inbox if they've provided it and submitted it to us.
Okay, and Nick, often, a picture speaks 1,000 words. And so I think alongside our investment director, John Butler, you've come up with a little cartoon that maybe we can flash on the screen that can help explain things to people.
Yeah, so our investment director at the Fleet Street Letter, John Butler, came up with this crazy idea that the Bank of England is like a dominatrix controlling our national politicians like puppets on a puppet strip. And he decided to turn this idea into a crazy cartoon, which I believe is what you're looking at right now. And I better explain it as well. The Bank of England is also known as the Old Lady of Threadneedle Street, which is why the Bank of England Governor Andrew Bailey looks the way he does.
Well, I don't imagine he goes shopping for clothes just like that. But moving on, I think there's a couple of other things to talk about before we finish up today. Okay, and long-time readers of your research, Nick, will be well aware of everything you've written about Italy in the past, and that's a pretty extraordinary case, am I right?
Yeah, this is probably the textbook case, and I think this is why I was able to identify what's going on in the UK now, and as of very recently, what's going on in France as well. So what happened in Italy in 2018 was that a right-wing and a left-wing coalition government came to power, and what they wanted to do was spend vast amounts of money and to cut taxes. And the ECB, the European Central Bank, basically rejected this. But the way that they rejected it is by allowing the bond market to crash. And this caused the cost of financing the deficit to go up for the Italian government, and that was enough to change their behavior, to change their spending and taxation promises, and effectively to control that government from that point on.
Yes, and readers, if you look on the screen now, you'll see that Nick predicted this 5 days before the mainstream media went into a frenzy about it. And that sort of urgency is the most remarkable thing about this prediction. The key point to take away is that central banks are manufacturing these crises so they can implement their own policy goals. As you'll see in a moment, the Bank of England has its own policy goals laid out in the IMF document that Nick mentioned earlier that will negatively affect the lives of everyone in the UK.
But let's take a step back here and look at some more examples where this has happened before so that people can realize that it wouldn't be a massive surprise for this to occur in the UK as well. A really good example from recent history is the Greeks in 2015. I'm sure everyone will remember this period. The Greeks held a referendum on whether or not to accept the austerity that the European Central Bank was demanding at the time. Now, of course, the Greeks voted oxy, meaning no at the time, but their government imposed the austerity measures on them anyway. Why did that happen? Because the European Central Bank allowed the bond market to force the government to do it. Bond markets crashed, interest rates went up, and the Greek government changed its mind. Another good example involves nothing less than the world economic superpower, the US. Back in 1994, President Bill Clinton was spending like mad, but the bond market forced him to change his mind. He was forced to go into a fiscally conservative stance because the bond market crashed, wiping out 1.5 trillion US dollars at the time. Again, these days, Clinton is known as a fiscal conservative, but it's only because the bond market forced him into that position.
Yeah, I mean, it all reminds me of that great quote by, I think it was James Carville, who said, I used to think if there was a reincarnation, I wanted to come back as the president or the pope. But now I would like to come back as the bond market because you can intimidate everybody. And the number of examples is kind of astonishing for something that no one really realizes. But if it's all true and the Bank of England really is running the country, what does it have planned next?
I'd hate to think if James Carville came back and discovered he was the bond market, but now the central bankers control the bond market and he didn't do any better in the end. But yeah, like you say, the question now is, if central banks do control the government, what do they have planned? While the rest of the country is focusing on what's in the Labour or the Conservative or the Reform manifesto, we should really be thinking about what does the Bank of England want the country to do?
Okay, so yeah, what does the Bank of England have planned for us?
I believe it's about to implement what I call an invisible tax to try and pay down the national debt. There are two parts to this. The first is inflation, and the second is very low interest rates. It's all laid out in this report from the IMF from 2015. The way to think about this is that the Bank of England knows the government's national debt is out of control. It's a risk to financial stability. There are two ways to deal with that. The first is very unpopular and very visible. We call it austerity. It's high taxes and low government spending. But there's also the sneakier, less accountable way of inflating away government debts. They choose that second path whenever government debt is too high for austerity, which is precisely the point we're at now. The invisible tax, inflation, will hit every family in Britain. It's all following this plan that I pointed out from the IMF report.
And I mean, we saw that austerity was followed after the great financial crisis of 2008 and is very unlikely to be followed again, given how badly that went down with the entire country. So this invisible tax feels like really the only solution the Bank of England has left. The only question is, how is it going to affect people's lives?
Kit, if you think the pain from the cost of living crisis is over, think again. We all know what it means to face double-digit inflation. We've just been through it for the last few years. My claim is that we're facing the same cost of living crisis several times over the next 14 years. That's what the IMF document reveals. That's the plan the Bank of England is following, and that's the cost of living crisis we're going to face several times over in the next 14 years. And all of this, by the way, is not that unusual in British history. It's the very same plan we followed to pay off the Napoleonic War debt. It's the same plan we followed to pay off World War I and II debts, and it's the same plan we're going to follow this time around as well. It's the strategy the governments use when they're in too much debt and they can't pay it off with austerity.
Okay, but if a second wave of inflation is coming, why are so few people talking about it? I mean, surveys show that the British public is expecting inflation to fall and keep falling over the next year. In fact, I think expectations are that it falls to 3% by next February.
Yeah, a couple of things, Kit. The public didn't exactly see the inflation coming in 2021 either, right? So inflation expectations are one thing. The real question is, what did the government and the Bank of England want? What are they going to impose? In my report, I explain how all famous economists historically agree that inflation is a policy that governments can use to get rid of their debt, and that's what we're doing now. The second thing I'd like to point out is that I'm not just predicting another surge in inflation. I'm predicting many more surges of inflation. We'll experience what we experienced the last 3 years several times over the next 14 years. The last point I'd like to make is that for this plan to work, it has to come as a surprise that inflation surges. If people expect inflation to surge, the plan no longer works. And that's one of the reasons I've written the report exposing all of this. If people realize what's coming, they can change their behavior and avoid the crisis that the rest of us will face. And all it really takes is for people to understand what this plan is. And while the rest of people in Britain are not aware of what's going on, and they'll be caught out by this plan, just as they were in 2021, the readers of this report won't be caught out. They'll understand what's happening and what to do about it ahead of time, just like I warned in 2021.
Okay, so Nick, you've laid out in pretty clear steps and with plenty of evidence what's happening and why and what's going to happen, but why we're not seeing this anywhere else? Who else is writing about it, or are they at all?
Well, the whole point, like I say, is that people don't realize it's going to happen, just like they didn't realize in 2021. So don't expect to read about this in the media. In fact, the fact that we found this IMF report, I was surprised that it's so publicly available and out there for anyone to read. And it outlines exactly what's happened over the last 3 years and exactly what the Bank of England is planning to do over the next 10 years or 14 years. The fact that we're not covering this in the media is part of the scheme. If everyone realized what's going to happen, the consequences would be that the interest rate on bonds would surge, and that would negate the effect of inflating away the government debt. So it's required that this remains secret.
Okay, so it's clear that the power behind the throne, this shadow prime minister, is bent on unleashing more inflation. But I suppose the next question is, what can the people watching today do about it? I mean, when you called inflation and the stock and bond market crashes in recent years, that wasn't all. You also found ways to help people protect their wealth or even profit from it. And is that true again this time? Are there ways and financial assets to avoid and buy?
So the way we've gone about this, Kit, is that we've created 4 different reports. The first report is already in your inbox. It's the one we discussed earlier, the one that explains that the Bank of England controls the government and is deciding what government policy will be. The second report lays out what the Bank of England actually has plans. It reveals what's in the IMF's plan, how the Bank of England is going to follow that, and what it means for you. The third and fourth report are very interesting. They're what to buy and what to sell if you agree with our analysis. What should you do in your investment portfolio if you agree that the Bank of England is running the country and is going to implement high inflation and low interest rates? There's a long list of different investments that you should sell now if you believe the Bank of England is embarking on the IMF's plan. There's also a selection of investments that should benefit from what the Bank of England is planning to do to this country.
Okay, Nick, all sounds very interesting. I don't suppose I could induce you to talk about anything in specifics now in terms of what to avoid?
I think the one I'm comfortable giving away is the idea of avoiding a pension fund, one of those big funds where your savings are managed for you by someone else. And the reason for this is that I believe you need to take control of your own finances in order to escape what the Bank of England has plans for you, in order to escape the inflation. And there's a peculiar reason for this, which is related to the Bank of England's plan and the IMF's plan. And that's that they have to find someone to apply this inflation tax to, this hidden tax to. Someone has to be the victim here in order for all of this to work. And I believe the pension funds are going to be pressured or even forced to be that victim. According to the IMF paper, actually, the pension funds in parts of Europe are already being dealt this treatment. It's one of the reasons why financial markets in Europe perform so badly and pension funds in Europe perform so badly. They're being deliberately targeted by this IMF plan to try and get rid of national debts. So it's already happening, and I believe it's going to happen in the UK as well.
Okay, so Nick, on top of the report that is already in their inbox or on their way to their inbox right now, can you just detail what else is on the table for viewers today?
Yes, so the second report we want to send you is called The Bank of England is Coming for Your Savings. It outlines what is in the IMF's plan and how the Bank of England is planning to implement it. The report after that is called 5 Toxic Time Bombs to Sell Now. It reveals which investments you should avoid if you agree with our predictions of what's coming. The fourth report is called How to Profit from the 2024 Election Surprise. It details how you should invest your money given what's coming.
Okay, so there really is quite a lot out there for viewers to get their teeth into in terms of understanding the depth of material and evidence behind all this, Nick. For everyone watching at home, all of this is available to you when you take up a 30-day trial subscription of the Fleet Street Letter. The Fleet Street Letter is where Nick shares his insights about markets. It exists for one sole reason: to help you understand the deep changes happening in the world and to show you how to benefit from it financially. In the past, that deep change has included World War II, the Black Monday market crash, the rise of crypto, and the great financial crisis of 2008, all of which we've mentioned today. But the change today that we want to discuss is the shift in power from politicians to central bankers. Over the years, our organisation has included MPs, members of the House of Lords, ex-MI5 and Soviet spies, and former Citi fund managers. Our global intelligence network today includes the leader of the Reform Party, Nigel Farage, former MEP Godfrey Bloom, former Citadel fund manager Daniel LaSalle Fernandez, and a man said to have played an unseen role in the election of Argentine President Milei, Federico Tesori. Finally, there's Gold Money's head of research, Alistair McLeod, and the founder of Southbank Investment Research himself, Bill Bonner. So Nick, can you just quickly give us some detail on the publishing schedule of the Fleet Street Letter?
So what we've outlined in this presentation is unusual. We don't usually issue 4 reports on one topic, but this is the biggest warning we're giving investors since that warning about World War II way back in 1939. So we believe it's worth publishing something much longer than usual. Usually what we do is have a weekly update to let our readers know what's going on in the investments we recommend and in the big trends that we've discussed. There's also then a monthly issue in which we outline new ideas, new investments that people might want to consider, and occasionally an update on an existing trend that we've identified.
Thanks, Nick. And if the testimonials the readers send to you are any indication, they're incredibly happy with your work. And I think you should be able to see some of those on screen now. So just to recap, here's a reminder of everything that you get when you take up your no obligation subscription to the Fleet Street Letter. The Bank of England is coming for your savings is the first report, which lays out the Bank of England's 17.5-year plan to liquidate your pensions and pay off the national debt. Then there's 5 toxic time bombs to sell now. These 5 toxic assets are especially vulnerable as the shadow Prime Minister's policies roil markets. But if you sell them before the election, you should be able to sidestep their collapse. Finally, you'll get how to profit from the 2024 election surprise, a report which reveals the special kind of stock that can thrive amid high inflation. The key question now is, how much does it all cost? In the city, this type of investment-grade research would cost thousands of pounds. But at Southbank, we want to lower the barriers for entry for everyday people. That's why today the standard retail price for a year's worth subscription to the Fleet Street Letter is £250. But given the urgent significance of everything you've seen and heard today, for a very limited time, we're offering the Fleet Street Letter for just £99 per year. If you'd like to take us up on that offer, simply click the button below and you'll be taken to a secure order form where you can review everything that's on the table. With the election looming, we feel there's an urgent opportunity for investors to profit and protect their wealth, and that's why we're offering this short-term discount. Well, there you have it, everyone. The man who warned of imminent inflation in 2020 when central bankers and the media were dismissing it. And the man who predicted the massive sell-off in bonds and the worst year for stocks since 2008. He has now shown us examples from all over the world of central bankers pulling the strings of politicians in the UK, the US, Italy, France, Greece, and elsewhere. Now, they're getting ready to do it in the UK once again. The proof, to my mind, is incredibly compelling, and the only question that remains is, will you be prepared? In as little as a few months, will you be caught off guard by the next bout of inflation that the shadow Prime Minister will insist that no one could have foreseen? Or when the bond market is reeling again, will you be among those looking at your pension fund with a sinking feeling? We hope not, and that's why, in addition to revealing free and actionable insights today, we want to make your decision to join the Fleet Street Letter as easy as possible. Join today, and not only will you receive all of the professional research we've described today for just £99 and well below the thousands you'd be charged in the city, but you'll also be covered by our ironclad 30-day money-back guarantee. What that means is you'll have 30 days to peruse the research, the full Fleet Street Letter archive at your leisure. Decide if it's right for you, and if not, simply call our friendly London-based customer support team for a full and prompt refund. You'll get your £99 back, no questions asked, and you'll be able to keep all the research that we've sent you today for free forever. Why are we doing this? 2 reasons, really. Firstly, because we know that you have to try our work first to see if it's the right fit for you. A no obligation 30-day trial is the right way to do that. But more importantly, as you've seen, we're at a unique moment in British history. Arguably a once-in-a-century moment, and those who don't act in the next 30 days could fall prey to the shadow Prime Minister's invisible tax that Nick has laid out. So don't delay. You can secure all of the research reports we've covered today in seconds by clicking the button that's flashing below the screen now and entering your information in the secure order form. Remember, you'll get instant access to the 3 reports: the Bank of England discounting for your savings, 5 toxic time bombs to sell now, and how to profit from the 2024 election surprise. But Nick, I'll turn it over to you before we sign off. Any parting words for anyone watching tonight?
I think what I'd like to emphasize, Kit, is this is the most important thing facing everyone in the UK and perhaps even in Europe and the US as well right now. It's not just important for investors. We are all facing the inflationary challenge that the Bank of England is planning to throw at us. That's why these reports are so important. They detail every single step you should take and explain exactly why you need to take those steps. That's the challenge I set out for myself and our investment director of the Fleet Street Letter, John Butler. And we believe we've delivered that in those 4 reports, the first of which is already in your inbox.
Thanks so much, Nick. I think you've given everyone a hugely easy decision to make today. It's definitely been so enlightening for me, and I'd like to give everyone watching at home one last chance to join the Fleet Street Letter, take advantage of everything that's been described tonight, especially our full briefing on the Shadow PM's plans, what you stand to lose and how you can protect yourself, and even how you could profit. So once again, click the button below and you'll be able to take up your trial membership and download your special reports with no obligation whatsoever. That's all for tonight. To everyone watching, I hope to see you on the other side. Thanks very much.